Those results are out. ServiceNow revenues beat at $3.09 billion versus $3.08 expected. Earnings per share beat at $4.04 adjusted versus $3.83 expected. Within that, subscription revenue was at $3.01 billion versus $3 even expected. Q1 non-GAAP gross margin at 82% versus 81.7 expected. And let's see. CRPO, the remaining performance obligations, at $10.31 billion versus $10.11 billion, indicating a strong pipeline. Guidance also above expectations. Q2 subscription revenue guiding to $3.03 billion to $3.04 billion versus an expectation of $3.02. That's below the low end of the range that ServiceNow is giving here, and the full year guide a bit ahead of the street's consensus. I did have a chance to catch up with ServiceNow CEO Bill McDermott about these results. He said on the overall financial performance, this quarter was a rule of 68 between free cash flow and subscription revenue, so not too bad. Our AI business quadrupled year over year, so it's really amazing. And we had 39 deals that had 3 or more Now Assist, that's AI, products in them. I asked him why customers are buying AI. He says they want to improve their margin profile with the uncertainty around how much revenue they will actually have. So they are preparing for a lower revenue situation. So they're really thinking about efficiency, effectiveness, OpEx down, margin profile improved, even if there's less revenue. They're not saying there will be, but they know there could be. Now, on the issue of delivering AI value and the cost of that, with the GPU spend, all these questions about infrastructure spending, how is ServiceNow able to deliver these kinds of results? He said, what we bet on a long time ago, John, is that the cost to operate those models would precipitously drop each and every month. And now it's about 1/30th the cost it was when we started integrating with those models in the beginning of our march to integrate with all those models. So they're cheap to run. So it might be that the GPUs or the infrastructure was expensive for the hyperscalers to invest in and the LLM providers to invest in, but for us to access and run use cases on our platform, it's very de minimis in cost. Now, I was just talking about Arvind Krishna and his concerns about brand America, making sure that that doesn't get damaged. I asked Bill McDermott about that as well. Here's what he said. He said, I'm seeing that these countries recognize that America is a great country. Everybody goes through speed bumps. Changes administration are hard. Rethinking economic terms and trade is difficult. I don't think they're going to hold it against brand America that we're in a period where we're working things out.